Odds of sterling hitting parity with dollar jump as analysts say UK bond market getting smoked by giveaway. The pound has hit an all-time low against the dollar after the bonanza of tax cuts and spending measures in Kwasi Kwarteng's mini-budget threatened to undermine confidence in the UK. The pound plunged nearly 5% at one point to $1.0327, its lowest since Britain went decimal in 1971, as belief in the UK's economic management and assets evaporated. Even after stumbling back to $1.05, the currency was down 7% in 2 sessions. As Asia-Pacific markets opened on Monday, Ray Attrill, National Australia Bank's head of currency strategy, said it's a case of shoot first and ask questions later as far as UK assets are concerned. Mark Chandler, the chief market strategist at Bannockburn Global Forex, called the currency's record plunge incredible and said there was bound to be speculation of an emergency Bank of England meeting and rate hike. Chris Weston, the head of research at the brokerage firm Pepperstone, said the pound was the whipping boy of the G10 foreign exchange market, while the UK bond market was getting smoked thanks to Kwarteng's £45 billion debt-financed tax-cutting package. Investors are searching out a response from the Bank of England. They're saying this is not sustainable when you've got deteriorating growth and a twin deficit. The funding requirement needed to pay for the mini-budget means either we need to see far better growth or higher bond yields to incentive capital inflows, Weston said. Kwarteng's mini-budget caused a rout in UK financial markets on Friday. Sterling shed 4 cents to hit a 37-year low of $1.0856, while the jump in the cost of government borrowing was the biggest in a single day in decades. The price of easy fiscal policy was laid bare by the market, said Sanjay Raja, chief UK economist at Deutsche Bank. He said Kwarteng's tax cuts were adding to medium-term inflationary pressures and were raising the risk of a near-term balance of payments crisis. A plan to get the public finances on a sustainable footing will be necessary, but not sufficient for markets to regain confidence in an economy sporting large twin deficits, Raja said. The UK current account deficit, which includes the trade balance and the net income from foreign investment and transfers, had already widened to a record level this year. The jump in the cost of imported energy is adding to this deficit, which is pushing the pound down towards levels that make UK assets attractive to foreign buyers again. On Friday afternoon, Bloomberg's options pricing model showed there was a 26% chance of the pound and the dollar hitting parity within the next 6 months, up from 14% on Thursday. Nouriel Roubini, the economist who predicted the 2008 financial crisis, warned bluntly that the UK was starting to be priced like an emerging market and was heading back to the 1970s.